wondering, when you look at what's happening in the banking system, how this impacts crypto, the sentiment around it, and draws new questions about how this can be a store of value and a method of payment, a way to be a new financial system.
Well, thanks for having me. Look, I think there's two things that are going on concurrently right now, which are impacting the Bitcoin price. I mean, first off, we've had a displacement of crypto companies out of their existing banking firms. Obviously, regulators are taking a different look at banking and how banks should interact with crypto firms. That's caused a displacement. The second thing, though, is really looking for when Bitcoin becomes the uncorrelated asset. This has been a theory around Bitcoin for some time. And seeing this kind of strain on the banking system, we start to see it decouple from other assets.
You mentioned the strains yourself. I'm glad you took us there, because the reality is regulators have been very upset about how much money has been lost, certainly among the exchange system, but also among the lenders in the crypto ecosystem as well. What comes next if there's so much regulatory pushback against the industry?
Well, look, actually, the regulators starting to participate is a positive thing more than not. Remember that, financial systems tend to go through ups and downs, and it's a balance of getting the private industry right and getting the regulation quite right. Obviously, FTX last November was a huge wake-up call for regulators that, it's time to start participating. Now, I think the regulators actually have a lot of fault in terms of how we got to where we're at. Frankly, if instead of having one bank that was shouldering the majority of the digital asset space completely on its shoulders, and it was a small bank out of San Diego, California. If instead we had hundreds of banks, each holding 1% of the industry on their shoulders, we would have had a much more robust system, and regulators could have helped that happen.
Yeah, maybe you could have avoided some of this concentration risk we've all been talking about for the last 2 weeks. In the absence, though, of that regulatory framework in which you would allow greater access to the traditional banking system on the part of crypto firms, it raises a question of if any entity can fill the gap here in the U.S., or instead these companies are just going to have to go offshore.
Well, that could happen. I think that would be an unfortunate byproduct. Look, I think regulators don't have the permission or right to kill an asset class. Frankly, it should be looked as shameful if that's what's going on. And it does look like there's Operation Choke Point 2.0 that's happening, where this regulator, backlash at the crypto industry. Their job is not to decide what Americans want or not want. Their job is to help regulate and make fair markets. So I hope they go back to concentrating on how to build fair, safe markets that people can count on, and make sure that crypto survives. There's a tremendous amount of opportunity with what we can change with technology.
Of course, one of the primary regulators in question continues to be the Securities and Exchange Commission, and SEC Chairman Gary Gensler, more particularly, some of the proposals he's put forward, including with custody. For BitGo, how do you view that? Would a proposal like Gensler's end up helping or hurting you?
Well, aside from the selfish impact on BitGo, look, we were a custodian, and we've been helping build market structure for 5 years. I think we were talking about it, long before it really caught a lot of attention at the federal level today. We definitely need to start building separations between the different functions of markets. When it comes to trading markets, we've always looked for robustness and separation of duties in a way that keeps investors safe. And frankly, if we had separation of custody from trading, it helps a tremendous amount. So for the most part, I like what's coming in the custody rule changes. There's a few things in there which, I would still tweak and change, but I'm glad that the SEC is weighing in on how should those underneath the Investment Advisors Act be custodying assets on behalf of their clients.
Mike, give or take a year ago, BitGo was seeking an acquisition by Galaxy over here. It was one of the largest in the industry. Things have changed a lot. That deal fell apart. There was a lawsuit that ensued after. How do you think about how you grow from here without an acquisition, and what comes next in kind of your pursuit of, you're pursuing funds against Galaxy?
Well, look, BitGo's been in a strong position. I mean, I think it's, actually part of, what just changed in 2021, 2022, which at some level led to Galaxy not being able to afford BitGo anymore. At this point, our business continues to grow. Now, we've been through the ups and down cycles of digital assets, and we're used to that. We know how to navigate that. It's unusual circumstances. Most businesses don't have quite the extreme of ups and downs. But we are building a whole new asset class here. We are building digital assets from scratch, defining a new market structure around it. And I don't mean just BitGo, I mean the entire industry. That takes time to put together. So, we feel fortunate. Like, we're excited to be able to continue to launch new products, and they've been coming fast and furious. We're known for our highly regulated and compliant approach that we take. We've always taken a really straight and narrow path. So we're in good shape. We're happy.
I know you've worked with a lot of interesting people here when you think about the payment rails that can support Bitcoin. Do you see more countries or more large institutions with the kind of complicated environment we're in really taking up the ability to move towards the crypto ecosystem for payments?
On the payment side, I don't know. I think that we're a little bit farther away on payments. There will be some wins around a certain amount of remittances and things like that. Look, stablecoins offer a tremendous amount of value, and that's being used to promote dollars actually around the globe. I think regulators should be quite happy about that. Otherwise, though, for payments, you need a stable value, right? And digital assets, sometimes it's confused. I mean, certainly high vol, but that's because it's small and just up and coming. So crypto, Bitcoin need to get much, much larger before they're going to be an effective payment system. The technology's fine. It's the size that needs to grow in order to get the volatility down.